Whenever prices are going up, the situation changes. For everybody that's invested, the question is, does it make sense to sell now, take some profit? For everybody that's on the sidelines, there is the feeling of FOMO. Does it make sense to buy now into this rally? How much higher can Bitcoin go? We're going to look at crypto prices in this video. We're going to look at reference prices. We try to look at the data most people are not considering to come up with a conclusion most people might not have. Because here's the obvious. Bitcoin is close to its all-time high and it rallied massively since November of 2022, an increase of more than 650%. And unfortunately, there is no proper way to value Bitcoin because there are no future cash flows like with property or like with stocks. There are no future cash flows, thus we have to use different methods. What's always useful is to look at psychology, as in where is currently the reference price? Are people currently in profit or in losses? And what we see over here, that's a cost basis distribution heat map. So how much of Bitcoin has moved at particular points in time, but also at particular price levels. And there hasn't been a lot of trading above the 108, 109K in Bitcoin. The vast majority of people are in profit, are thus considering to take some of their profit. And once we are at around 108K, we might see some people buying at that level again, because again, this is the reference price for most people now. This chart shows the short-term holder cost basis with a buffer to the top and to the bottom to account for volatility. In the past, it was a good time to buy when we were one standard deviation below the cost basis. The cost basis is here in blue, one standard deviation below that is the green line. And it might have been a good idea to at least partially sell once we are 2 standard deviations above. Now that's not the current price, right? We are only 1 standard deviation above. But I do believe once we get closer to 130 to 140K, the market could be, at least temporarily, somewhat heated again. How much of short-term holder supply is in losses or in profit? That's this squiggly line in orange. Currently, of course, with the new all-time high, most people are in profit. Now, there are 2 types of profit. There is the unrealized profit and there's the realized profit. So let's say we buy at a certain point, and then the price is going up. We've got a lot of unrealized profit. Once we sell, that profit gets realized and we might take that money, move this into other asset classes. The fundamental idea of measuring unrealized profit is to figure out, is the market potentially heated? Does it make sense for some people, because they're now so much in profit, to take some of the profit and then create sell pressure? And have a look at the short-term holder relative unrealized profit. Relative meaning how much percent are the short-term holders in profit. This chart starts 2 years ago, so when we were at roughly 30K in Bitcoin, and the short-term holders tend to take profit once they are roughly at 20% unrealized gains. Now, why is the neutral line floating over here? Why is it going up and down? And why do we have the standard deviations above that? It's because the volatility in crypto is changing over time as well, right? When the market is more calm, we might realize the profit already a bit earlier. Now, many data points suggest that we should potentially already right now realize some of the profit, but I disagree. I didn't sell a single Satoshi. I will continue to hold, and I might sell at roughly 130, 140K. And here's why. I do not believe that the realized profit and loss ratio for the short-term holders matters. Yes, it did peak when Bitcoin was at 100K and when it was at 72K, and subsequently the price did go down by 20 to 30%, and it's peaking again, but I think we are likely going to continue to go up. The long-term holder supply change is not yet at the levels when Bitcoin was at 100K or when it was at 72K. Yes, the long-term holders are now selling, but not yet at the rate that we have seen before. And I'm waiting for those lower levels first. Also, and this is a very important point, money continues to flow into the ecosystem. So this is the stablecoin market cap. Since October of 2023, money is getting into the market. So people are moving their fiat currency into stablecoins and crypto. And as money goes into the market, there's long-term upward pressure. And we can also have a look at the stablecoin market cap relative to all of crypto. And that's this chart over here, the stablecoin dominance. When this is very low, it means that people are very much risk on. There's not a lot of dry powder on the side. The stablecoin dominance is low. When this is higher though, then more stablecoin money is on the side. Dry powder is ready to be deployed. Crypto prices tend to be low. So we always want to buy when the stablecoin dominance is high. We want to sell when the stablecoin dominance is low. Just have a look at the Bitcoin price at the same time, right? We are now balancing between 5% stablecoin dominance at 9%. And whenever this is low, the Bitcoin price tends to be high. Whenever this is high, the Bitcoin price tends to be low. So this was a drop in the Bitcoin price of 26%. Then over here, we had again a drop in the Bitcoin price, this time of around 30% or so. So writing this indicator does make sense. Selling when the stablecoin dominance is at 5% is a good idea. And we are not yet at those levels. So again, I do believe Bitcoin has a very good chance to continue to further rally in the short term. I don't have a crystal ball either. I'm simply just looking at the data and I'm looking at approaches that historically worked, and I work with the assumption that they might work at least to a degree in the future as well. A clear shift in crypto has happened. Bitcoin is close to the all-time highs, yet the interest, the search interest, the retail interest is very low. Bitcoin gets supported because of Wall Street purchases, not because of purchases by retail. Nobody is searching for crypto or for Bitcoin anymore. The market is consolidating. The capital is concentrating towards a few winners. That's usual in any market, right? The vast majority of assets, the vast majority of players tends to go down, and there are a few winners. The winners take most. What we see over here is the performance of the smaller altcoins in the last year. And Bitcoin doubled in the last year, but most altcoins went down. And here's the thing, most people try to find the few assets that still do okay. They try to find the next Dragon coin or the next go-to. But how likely is it to get proper allocation to those assets and not pick any of those other red assets and burn all the capital? The odds are clearly against us. So this approach is clearly problematic. It's not easy at all. The approach of timing the macro environment is also not that easy. This is Bitcoin over time, right? And of course, it does make sense to buy Bitcoin after it has dropped 70 or 80%. That's the best time to get in. We are very far away from this, unfortunately. And the issue is also nobody wants to buy when we are depressed, because there's always a convincing story why Bitcoin will go to zero, why crypto is doomed, while nobody will get into the market again. We are far away from this, but in general, right, riding the macro is also not the easiest. Trying to find the next 10 or 100x altcoin is a problem. Trying to buy Bitcoin when it's extremely depressed is also not that easy. I do think there is an approach that's comparatively easy, where the odds are actually in our favor, not against us. That's by using the market structure to our advantage. This market structure here, right, that all of the altcoins go down all the time. Why do they actually go down? The answer is token inflation, right? It's new tokens that hit the market. It's the insiders, it's the venture capitalists, it's those paid influencers that get tokens, that maybe get them unlocked over time, that then simply just dump on retail. That's why all the retail investors lose over time. They simply get dumped on by the smart money. Why do venture capitalists like Andreessen Horowitz like crypto? Why do they invest in it? They do this because they get into the projects very early. They've got a very tight network. They've got a lot of capital to play with. They get in early and then they sell off and dump on retail. Or why are there so many compromised influencers that take money or tokens of a project to promote a certain cryptocurrency? This here, for example, is BitBoy Crypto, right? A dedicated review. He asked $35,000 for that. The reason is simply conflict of interest. It's profitable to do this. I, by the way, never took any money from any crypto project. I also will never take any money from any crypto project. I want to make my money in crypto in a different way. And that is through building skills that help us to distinguish the noise from the actual signal. And again, it's all about taking that market structure to our advantage. There is a way to make money with it. When a token like Balancer inflates in supply, when the supply is growing and growing because the users of the platform get tokens, because the early investors get token unlocks and they dump on retail, when something like this happens, then as a consequence, the token, of course, does worse compared to Bitcoin, Ethereum, and Solana. So this is now Balancer relative to Ethereum, and it just constantly is going down. But we can just flip this on its head. When we go long Ethereum and short something like Balancer, we see a chart that's not possible to achieve with any single bet on crypto, right? This is very little volatility and very constant growth. This is now a linear chart. Here's the same on a logarithmic chart. Balancer is not a cherry-picked example. The overall altcoin market works like this. This is the unlocks over time for all of the tracked tokens on this website here. So the website is Tokenomics.ai. This is the weekly unlocks across all the tracked tokens, and it's above 600 million per week most of the weeks. So if there's not at least $600 million coming into the crypto space in a particular week, we see the altcoins do worse than Bitcoin, Ethereum, and Solana. This is how those kind of charts develop. This is why we see red everywhere. This is why the strategy works so well. Again, instead of trying to find the needle in the haystack, it's much better to bet on the overall structure. When most people cash out, when Andreessen Horowitz makes money by dumping on retail, why don't we just get ourselves on the same side? I'm following this strategy for almost 4 years now. What we see over here is in light gray the performance I would have gotten had I just dollar cost averaged into Bitcoin. But instead I did the relative valuation plays that I just described, and that's why I got the black line return. So this comes from an Excel sheet of my personal portfolio. This is monthly data, and it's got now 44, 45 data points roughly. I started this strategy with decentralized finance, so with borrowing and lending platforms like Aave or Venus Finance. But recently I do this with perpetual futures. So this started 2.5 months ago. I started with 40K and now it's at 60K almost. So that's almost 50% return in less than 3 months. I do not think that this will continue forever at that pace, but I do think in general this is a money-making strategy. The strategy has already worked for almost 4 years, and it also works with leverage on the perpetual futures. And so basically we just flip this thing around, right? Everything that's red over here becomes green. Everything that's green here becomes red. The odds are finally in our favor. We are not gambling on random meme coins, lose everything. Instead, we make money the same way how the insiders and the venture capitalists make money. We make money when the dumping happens. And so I understand the problem, right? If you followed other people like BitBoy Crypto and you trusted them and you've lost your money with them because you just followed whatever they said, and I do understand if somebody else comes along and says, follow my approach, that it makes sense to be somewhat skeptical. And so I was thinking about this. How can I prove that I'm very certain that this actually works? Here is the offer. Watch 2 tutorials in the premium membership. So this is one of them. It's half an hour in length, how to use perpetual futures on Hyperliquid to bet on relative valuations. And then there's the second video over here, which is at least equally as important. Risk management with relative valuation bets using Hyperliquid. If you don't know how to manage your risk, you've got a big problem with those instruments. But yeah, the offer is to just watch those 2 videos. Once you've done this, then I don't expect you to start trading by yourself already and find the best opportunity. This is only something for the people that have been around for a while. This is, by the way, a few trades that have been made by other members that are shared over here in the chats. I think it is much better to do a little bit of hand holding, as in I will share my favorite trade that you can enter with that strategy. So you know how to use the platform, you know how to set up the positions. I will share then what asset I believe has the most likelihood of performing in the near future. You will then enter the position, hold it for a month, and if you don't make any money, if you're actually in the red with that position, I will simply refund the premium membership for free to you. You don't have to pay anything for premium if you're not making money with that first trade that I'm sharing with you once you enter. Of course, besides that very first trade, I'm also sharing all the other trades that I opened. This, for example, was WorldCoin. WorldCoin has terrible tokenomics as well, and it underperformed Ethereum very consistently. But one thing after another, let's do the simple stuff first. Let's set everything up. Let's open the first trade, make that first profitable trade, make the first gains, turn ourselves around from being a constant loser to actually start winning. And then we can take it from there and become a bit more complex along the way. The premium membership is currently $125 per month. But again, I'll refund this in case you don't make money with that first trade. A link to premium should pop up directly over here on the screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.